Thanks so much for joining us. I'm Marlin Bohling with you on a Monday, a very busy Monday, and we're watching your ag commodity trade today. I want to see how the grain markets are opening up and then want to bring in a little expert commentary as well. Let's go to the board in Chicago. Let's see how the corn market is doing. Let's look first at the corn. There you go. We're down 2 at 3.49 1/4. That's on the low of the day so far. Well, close to it, within a tick. On the soybean trade here this morning, we have a little weakness here. March down 4 at 9.66 3/4, within about a penny and a quarter of our low of the range from overnight. On the wheat trade this morning, we have Chicago wheat on the march down 4 1/4 at 426 1/2. A lot of weakness creeping into the ag commodities here. Chicago wheat. We have the March contract in the Kansas City market. Let's take a look there. It's now trading at 432. That's down 5.5 cents on the day. And on the Minneapolis wheat trade, we have the March contract now down 4 1/4 at 622 1/2. Meanwhile, cotton market right now, we have the March contract up 22 points at 78.23 cents per pound. It's kind of eased off a little bit from its earlier highs from overnight. Chris Swift joins us here today, and he, of course, is with Swift Trading Incorporated in Nashville. Good to see you again.
Good morning, Marlon. Glad to be back.
So on these abbreviated segments we have here for all the Farm Bureau coverage at the convention, the national convention, tell me about this grain market. Kind of weak, kind of sleepy today.
It did. Pretty much started out last week with some of the issues that we've got in the soybean market, with China coming in saying we want a little bit more cleaner beans coming into our ports. So that kind of put a damper on it, and then our exports have not been quite up to snuff yet. So the bean market has probably weighed down the corn and wheat more than anything, more than them being down on their own accord.
On that topic, I had heard that they were having issues with maybe the corn maybe not being the best quality in China, and they were also looking for maybe U.S. higher quality cotton too, and that was kind of supporting the cotton market here lately.
Yeah,
I've heard.
There is all kinds of, everybody wants the upper hand, and to be able to have the cleanest and best product to come in and not having to pay the premium for it, that's always to the buyer's benefit.
How much of a problem is it here that we're running well behind the export pace expected for this time?
Well, that's a pretty big problem considering how weak the U.S. dollar has been. We all figured that another decline in the U.S. dollar would begin to spur some of that, but unfortunately there are just so much burdensome stocks out there. It's just going to take some time to weed through them all.
Okay, well, we'll come back in a minute. We'll see how the livestock trade is opening up here today. We are talking with Chris Swift of Swift Trading, and we'll have more about livestock when we come back. Let's check out the livestock trade. Go right to the board in Chicago on the live cattle trade. We are still down $1.17 on February at 118.08. April 65 lower at 120.20. The nearby is leading the way down. On the feeder cattle trade in the early going today, we have January down 24 at 146.38 and March down 36 at 141.62 per hundred. On the lean hog market this morning, we have the February up $1.67, just the opposite, 73.10. April $1.12 higher at 77.25. Make that $1.17 higher now, and the nearby is leading the charge higher this morning. So what is going on? Chris Swift rejoins us here with Swift Trading in Nashville. And Chris, looks like almost spread activity between the cattle and the hogs today.
A little bit there probably is, but I tell you, we've got a lot of marketing to go through for the month of January and February in the cattle market, and probably just a little bit of a leveling off of the demand that we have seen. I think demand will remain elevated, but it probably levels off and at a time frame when we have a little bit more inventory to have to market. So I think the combination of the two just makes for a little bit softer environment to be in.
So what happened on the cash cattle trade late last week?
Well, they ended up trading 122 cash, which was $1 less than the week before. Some people have come out and said various different things of the increased inventory in the Kansas and Colorado areas for feed yard cattle that are coming out. Probably just going to make for a real hard-fought battle in marketing.
You think this is more of a correction right now?
Oh, yes, I do. I think the cattle market is still in great shape right now.
Okay, and of course, I did want to point out the beef cutout values were higher again
on
Friday afternoon,
especially
on the select, so we'll watch that as well. Okay, well, thank you. Chris Swift has been joining us. He's with Swift Trading Incorporated in Nashville.